Every month you collect your paycheck, you notice something familiar. Deductions. Your salary's been cut by 20, 30, and sometimes even by as high as 50%. One of the mandatory deductions that goes through your payslip every month is something a lot of us wish we didn't have to deal with. Taxes. All of us, regardless of the jurisdiction you work or live in, are required by law to pay a certain amount of your money to the government. This money is supposedly meant to facilitate society's financial and social development. However, most of the time, it facilitates the financial development of a few corrupt individuals and greedy corporations such as banks. Of course, I know you know that your money is being stolen, and if you didn't, you will in just a minute. But do you really know where it's being hidden? And by your money, I'm talking about the taxes you painfully give to your government. I made this video because I believe you deserve to know how the super rich, corrupt foreign governments, greedy corporations, and banks steal your money and where they hide it. You see, more than half of the trade happening in the world today passes through parts of the world where greedy entities don't have to pay much taxes or any at all. These places are commonly known as tax havens.
Tax havens.
Tax havens.
Tax havens.
Tax havens.
Over half of all bank assets and almost a third of foreign direct investment by multinational corporations are channeled offshore into these tax havens. In addition, at least 85% of international banking and bond issuance takes place in the so-called Euro markets, a stateless offshore zone. Nearly every multinational corporation uses tax havens, and their largest users by far are on Wall Street. But that's a story for another day. The world contains roughly 60 secrecy jurisdictions, or tax havens, which can be divided into 4 groups. A set of continental European havens, a British zone of influence centered on the City of London and loosely shaped around parts of Britain's former empire, a zone of influence focused on the United States, and a 4th category holding unclassified oddities like Somalia and Uruguay. British journalist Nicholas Shaxson reports, in his insightful book Treasure Islands, Tax Havens and the Men Who Stole the World. So how do these tax havens work? What are the essential principles that guide them? What is their history? And where are they located? This is the dark world where your stolen taxes are hidden.
Should these tax avoidance institutions be allowed to exist? And why do wealthy individuals hide their money abroad? Is it greed or lack of trust in their governments? 13 million documents, mostly from an offshore law firm called Appleby.
The use of tax havens by multinationals and wealthy individuals deprive countries of $472 billion in tax revenue every year.
Most of us understand tax havens as places that offer favorable tax laws and rates for the citizens and corporations that reside and operate there. The thing is, tax havens are a little more complicated than that definition. You see, nobody 100% agrees what the exact definition of a tax haven is. In fact, it often sparks a debate, yet the insightful world of Nicholas Shaxson serves as a helpful guide. Shaxson suggests that a tax haven is a place that lures money by offering a politically stable environment to assist individuals or entities in circumventing the laws, rules, and regulations of jurisdictions elsewhere. Grasping this idea helps us realize that tax havens aren't just a small, odd part of the world economy. Instead, they're actually the central beating heart of it. Companies of all sizes, powerful politicians, and individuals use these tax havens to hide money and circumvent taxes from the public and authorities. Once the money is slipped into the offshore world, it undergoes an intriguing metamorphosis. You see, an accountant's ledger reclassifies the money, imbuing it with a new identity, ensuring it stays hidden from the watchful eyes of tax enforcement agencies. It's a clever, intricate system that these people use, and you deserve to know how it all works, from the private infrastructure, regulations, and countries that facilitates and nurtures this system. You will know them all. You may shrug and tell yourself that tax havens are just part of the ugly flip side of living in a rich nation. If you do, in your reluctantly cynical way, I'm sorry to say, you are a sucker, because you're a victim too. This is not an exclusive party hosted by the likes of America or Europe. Countries like Honduras, Gambia, and the British Virgin Islands are also getting a piece of this shady business. So get ready as we peel back the layers of this shady modern system. One of the most common questions people ask about tax havens is how they work. A tax haven is at heart about artificially manipulating paper trails of money across borders. So to visually illustrate how greedy companies do this, let's use a hypothetical US multinational, Big Banana, as an example. You see, a bunch of bananas typically takes two routes into your home, a real route and an artificial offshore paper trail. On the first route, a Honduran worker, say, is employed by Big Banana, the US multinational we've just invented, to pick the bananas, which are then packaged and shipped to Britain on the second route, where they're first sold to a supermarket, then to a customer. Something important happens during this dramatic transit. The accountant's paper trail is changed between the first route and the second route. So when a banana is picked in Honduras, shipped to Britain, and sold to a customer in a supermarket, where are the final profits generated? Is it in Honduras, the sources of the bananas? Or is it in the British supermarket, where it's sold? Or perhaps it's in the multinational's US head office? What roles do the company's management skills, brand reputation, insurance, or accounting play in making a profit and covering expenses? Which country should tax each part of the final profit? These are very complicated questions, and it's hard to say for sure. Because of this, the accountants, to a certain extent, decide where they want to report the profits, expenses, and all that. In simple terms, this is how the accountants move around the money and manipulate the paperwork while dodging taxes. They advise Big Banana to run its purchasing network from, say, the Cayman Islands, and put a financial services subsidiary in Luxembourg. 2. The Big Banana brand might operate in Ireland, its shipping subsidiary in the Isle of Man. It might locate certain parts of its management expertise in Jersey, and its insurance arm in Bermuda. Keep in mind that Jersey and Bermuda are tax havens. 3. One part of the Big Banana charges the other for the services provided. Practically, this is how the offshore game rolls. The Big Banana in Luxembourg lends money to the Big Banana in Honduras through its finance subsidiary at $10 million annual interest. The Big Banana in Honduras proceeds to deduct this interest from its local profits. When this $10 million interest reaches the Big Banana in Luxembourg, it's recorded as income, since Luxembourg is effectively a tax haven. Just like that, with the wave of an accountant's wand, a hefty tax bill has disappeared. Essentially, what these Big Bananas have done is to transfer pricing or mispricing. As Nicholas Saxon puts it, the general idea is that by adjusting its internal prices, a multinational can shift profits offshore, where they pay little or no tax, and shift the costs onshore, where they're deducted against tax. With this Big Banana example, we can see how the tax money was taken away from a poor country, then sent to a tax haven, and then moved to the bank accounts of the big international company and the rich owners. Circumventing taxes and channeling profits offshore is a widespread Wall Street practice. Take the case of Google, for instance. In October 2010, a Bloomberg reporter exposed how the company cut its taxes by at least $3 billion in the last 3 years, thanks to transfer pricing, ending up with an overseas tax rate of almost 2.4%. Microsoft's tax bill has been falling sharply for similar reasons. So is Cisco, Amazon, and a bunch of companies. This practice of transferring pricing costs the US roughly $60 billion a year in lost taxes. This thing is deep, and it impacts everyone. It's not just about your bananas. A lot of the food you eat probably took a similar complicated journey to get to you. The water you drink might have also followed a strange paper trail before it reached your mouth. The same goes for your TV, its parts, and many shows you watch. In short, this hidden part of the world affects us all. Now that you know how tax havens work, let's answer the next question. What are the two essential principles that guide the success of tax havens? At the core of every tax haven lies two fundamental principles: exceptionally low or virtually non-existent taxes, and punitive measures to silence those who dare criticize the system are the two essential principles that guide tax havens. The allure of low to zero taxes attracts individuals and corporations to these financial fortresses, allowing them to circumvent taxes through legal means or otherwise. Intriguingly, these havens often boast expansive financial service industries, strikingly disproportionate to the size of their local economies. The surprising part is they ring-fence their own economies to protect it from the behemoth financial service industry it harbors. Consider this: they might offer you a tax-free place for storing your wealth, and as long as you're not a citizen, you can enjoy this benefit. Now here's the thing: while foreign entities and individuals enjoy ludicrous tax benefits, the local citizens still have to pay full taxes. This ring fencing tacitly attests to the detrimental effects of their own actions. In a bid to maintain a clean facade, tax havens often vehemently deny their true nature. Enter, "We are not a tax haven," or "We are a transparent, well-regulated and cooperative jurisdiction" into a search engine, and see what comes up. These tax havens are essentially escape hatches, skirting rules and regulations of other jurisdictions. Take the Cayman Islands as an example. The zero tax policy isn't for the locals, but rather serves as a magnet to attract the businesses of North and South Americans, Europeans, Asians, Middle Easterners, and Africans alike. That was just the first foundation of a tax haven. The second, like I told you earlier, is the way it addresses those who may plot its downfall. Each tax haven has its own unique way of handling critics. In the Cayman Islands, for example, fraud, corruption, and scandals are regularly downplayed as media stereotypes that don't align with the so-called objective reality. Yet one striking commonality amongst these havens is the influence financial interest has on local politics. And sometimes these interests carry a criminal undertone to them. Any meaningful resistance against the offshore money system is quickly shut down in these tax havens. They make sure local politics don't get in the way of making more money. This leads us to a strange contradiction. These areas that give total freedom to financial interests often become repressive places, viciously intolerant to any criticism. They're a jurisdiction that has a twisted sense of right and wrong. You see, ignoring crime and corruption is seen as good for business because it attracts money, while reporting illegal activities is punishable. In tax havens, transparency, democracy, and the concerns of local citizens don't matter, as long as financial institutions are happy. These institutions have fallen under heavy criticism, considering the huge benefits given to corporations such as limited liability, which lets investors limit their losses and pass on remaining debts to the rest of society when things go wrong. Corporations are also allowed to move to different areas almost whenever they want, no matter where their actual business is. In exchange for these great benefits, corporations were originally supposed to be responsible towards the societies they operate in. This includes being open about their activities and paying the right amount of taxes. In exchange, the government builds infrastructure, education, and ensures law and order, all of which are necessary for any corporate activity. That being said, how much do we know about these tax havens? There are approximately 60 known tax havens worldwide, which can be broadly divided into three categories: a collection of continental European havens, a British sphere of influence centered in London, and loosely shaped around parts of Britain's former empire, and certain states within the United States. The European tax havens, which began functioning effectively since World War I, when governments started raising taxes to fund their war expenses, comprised Switzerland, Luxembourg, the Netherlands, Austria, and Belgium. Luxembourg, a picturesque yet relatively obscure country, for instance, ranks among today's leading tax havens, with over $2.5 trillion being harbored there. A few other minor European havens worth mentioning include Monaco and Andorra, with occasional first-time appearances from unlikely places like the Portuguese islands of Madeira. Madeira, in fact, played center role to a major Nigerian bribery scandal involving U.S. oil service company Halliburton that resulted in the second-largest fine ever paid under the Foreign Corrupt Practices Act in the U.S. The second offshore group, accounting for about half of the world's tax havens, is a mammoth monster, and is in fact the largest. It consists of a layered hub-and-spoke array of tax havens centered on the City of London. This network of the City of London has three primary tiers. Its inner layer consists of Britain's three crown dependencies, the nearby islands of Jersey, Guernsey, and the Isle of Man. The intermediate layer encompasses Britain's 14 overseas territories, which include the Cayman Islands, Bermuda, the British Virgin Islands, Turks and Caicos, and Gibraltar. The outer layer is a more diverse assortment of havens like Hong Kong and the Bahamas, which are outside Britain's direct control, but nonetheless maintain robust historical ties to the empire and profoundly deep connections to the City of London. The third tax haven is situated in the United States. You see, prior to the global offshore expansion of the 1960s and 1970s, the US government generally opposed offshore businesses, combating the British network in the European havens. However, as the 1970s progressed, financial interests increasingly influenced US policymaking. Faced with substantial deficits from the Vietnam War era and increasingly subscribing to an if-you-can't-beat-them-join-them attitude toward tax havens, the US began consciously adopting offshore attributes in an effort to attract financial capital to offset the deficits. Two dynamics are at play here. Tax revenues and other funds are siphoned from the United States into offshore tax havens, and a flow of dubious foreign money is redirected into the country. It's estimated that offshore tax havens cost the United States $100 billion annually. However, the influx of funds into the U.S. tax haven doesn't compensate for the monetary and tax revenue losses. The inflows have made matters worse for the average U.S. taxpayers, not to mention foreigners being cheated by their affluent and unaccountable elites. The money channeled into America's tax haven disproportionately benefits a small financial elite, contributing to Wall Street's excessive influence on the U.S. economy and Washington policymakers. Tax havens are engaged in economic warfare against the United States and honest, hardworking Americans, says Senator Carl Levin. Like its British counterpart, the U.S.-based tax haven operates on a similar model. At the federal level, or top tier, the U.S. offers an array of special tax exemptions, confidentiality measures, and laws intended to attract foreign money into the country, mirroring offshore tactics employed by tax havens. For instance, the U.S. banks can legally handle proceeds from a variety of crimes, such as dealing with stolen property, as long as the crimes are committed overseas. Special agreements are established with banks to ensure they don't disclose the identities of foreigners depositing their money in the United States. The second tier of the U.S. offshore structure includes several U.S. states. Take Florida as an example, where Latin American elites deposit their wealth. Banking information here is deeply veiled, mirroring the overall trend across the U.S. The third U.S. offshore tier is a relatively small overseas satellite network, far smaller than the British equivalent. One is the U.S. Virgin Islands, an insular area and a minor haven for businesses like Bank of America, Boeing, FedEx, and Wachovia, among others. The Marshall Islands is a more interesting tax haven in the U.S. zone, and it was a former Japanese colony and has been under U.S. control since 1947, currently operating under a compact of free association with the United States. This unusual and relatively unknown pattern, reminiscent of the neo-colonial role of the secrecy jurisdictions within the British zone, indicates that these jurisdictions have been quietly central to neoconservative strategies to extend U.S. influence worldwide for years, and almost nobody has noticed. The corporate sector seems to have lost its moral compass, and the rest of society is bearing the brunt. Paul Hogan, the lead actor in Crocodile Dundee, highlighted a critical issue in 2010 when discussing an investigation by Australian tax authorities into his offshore tax affairs. "I haven't done my own taxes for 30 years, he stated. "They talk about me going to jail. Hold on, there are around 4 law firms and about 5 accounting firms, including some of the world's largest, that would need to face jail time before me." Hogan was referring to the big 4 accounting firms, KPMG, Deloitte, Ernst & Young, and PricewaterhouseCoopers. These multi-billion-dollar entities symbolize the rot permeating the corporate world today. Whether Hogan is right or wrong is up for debate. The fact remains there are systems and laws in place to give anyone with the right connection and resources to lower the amount of money they have to painfully shell out. And whether that be a corporation, a stranger, or even you, ethics aside, as long as it's legal, then everyone is within their right to do what they can to keep as much money as they can. Perhaps the solution to mitigate the harmful effects is to provide a framework for tax-paying citizens, both in developed and developing nations, to rally for a shared cause. That said, thanks for watching. If you enjoyed this video, I'm sure you're gonna love this one.